All right, people, we got to talk about why I don't think Bitcoin is going to have this big retrace. A lot of people are looking at the Fibonacci signals, saying that there's going to be a 30 to 40% retrace once we hit 48K. Some people are saying, hey, you got to look at the economic cycle, and anytime they've actually raised or lowered rates, we've actually gone down a bit. And also, hey, there's a buy the rumor, sell the news thing of the Bitcoin ETF. And that's going to cause a big retrace. So we're going to take these one step at a time. Let's start with the Bitcoin ETF. It's not going to cause a big retrace because unlike other buy the rumor, sell the news stuff, this one actually has real physical Bitcoin buying pressure. I've said this a couple of times, but people have continuously ignored it because they're set on the sell the rumor, buy the rumor, sell the news. Yes, you can short this Bitcoin ETF, but according to a lot of the big institutions, they're seeing a lot of fundamental interest in this product. And the thing is, it's going to be cash-based only, which means it actually might be better for the initial Bitcoin pump. Because cash-based basically means people give cash to BlackRock, and BlackRock has to use that cash to buy the underlying Bitcoin to support the ETF. Whereas in-kind is like people give Bitcoin to BlackRock, and then BlackRock issues them a share of the ETF. So the cash model means they actually have to buy with the cash, and that makes Bitcoin go up. Even if it's only OTC, it will actually affect the market. Because obviously OTC, if that dries up, more and more people will have to buy through the stock market. I mean, from the exchange market, which will definitely drive prices up. So yeah, I don't think there's that much debate on that, whether it's going to really have a physical effect on the actual price of Bitcoin. People might suddenly sell once the news is done because ARK Invest has actually sold off a lot of their Grayscale ETF shares prior to this, even though Grayscale is going to be converting into an ETF. But that also might have to do with the fact that ARK is going to be competitive with Grayscale in their ETF filing because they're doing an ETF themselves. So it's kind of a two-way street there, and I'm not really too concerned with that. The other part is some people are saying, well, anytime the Fed reverses interest rates, the economy generally goes down and Bitcoin's going to retrace with it. One, Bitcoin doesn't naturally follow the stock market like one-to-one. We've seen that right now because the stock market's at an all-time high and Bitcoin is not at an all-time high. But otherwise than that, you have to look at the other macro factors going into Bitcoin right now, or the economy right now. Usually, the Fed basically lowers interest rates because the economy is already in a recession and they're basically trying to pull the economy out of a recession. Despite what people are saying right now on their lips, we're not actually in a recession right now. And they've been predicting a recession all throughout 2023. It didn't happen. So now they're quickly revising it for 2024. And by the other factors, it doesn't look like it's actually happening right now. Gas prices are going down, although the Red Sea thing might temporarily bring them up a little bit. Inflation is being controlled, and the Fed has not raised interest rates anymore. And unlike most recessions, people are still spending like crazy, if you haven't realized. Even adjusted for inflation, consumer spending has not gone down. So people might be saying like, oh, things are so bad, I can't afford stuff. They're not acting like it with their wallet, and that's what matters because they're continuing to buy stuff with their wallet. If they were really being squeezed, they would not continue to buy things like crazy with their wallet. It's kind of like, the American consumers are saying like, oh man, it's so hard pressed. Things are so bad. I can barely buy my second BMW. I'm just like sitting there going like, bruh, if things are so bad, you should like consider buying a Corolla instead of a BMW, So like, you're not really convincing me that the economy is really that bad or inflation has made it that bad, because if that was true, your spending at least adjusted for inflation would go down, and I'm not seeing that. You're still buying a lot over the holiday season, and the numbers back that up. American consumers aren't actually buying any less. Companies are reporting like record profits, and that's by selling a lot of stuff. So obviously, American consumers still have a lot of money to spend. And the thing is, the kind of like the inflation definitely affects different tiers of the American society differently. I think the main effect right now is to the lower classes. I think like the mid, upper, and upper class, and even most of the middle class isn't that affected by it. The people that have white collar jobs have seen their salary raise a lot too, especially those that work in healthcare and those that work in tech. Their salaries have probably outpaced inflation because I've seen some of the salaries in the tech sector. They're going nuts. Same thing with the healthcare sector. So there are still a lot of people with a lot of money buying random products or buying a lot of products. So I'm not really that concerned with the products with like stuff not selling. I think that's going to carry over into next year. And I don't think consumer spending's really going to go down, especially as gas comes down, as soon as we get this Red Sea thing worked out. And as soon as basically like inflation comes down even more. And in the like next year, once the interest rates come down, like these crypto investments and risk on investments are going to get more and more appealing compared to your low rate bonds and your low rate like investment savings accounts, because those vary with the interest rate and those are going to come down to 3-4%, maybe even 2% sooner or later. And so like something that's yielding 5, 6, 7, 8% like crypto is going to look more appealing. So that can only really help crypto at this particular point. So like that's the second reason I don't think like a rise in interest rates will actually get crypto to come down, because we're not in a recession, and I doubt we're going to be in a recession anytime soon. And usually when they lower interest rates, we're already in a recession. And I don't think like the Fed needs to print any more money for us to keep out of a recession. I don't think we're getting a stimulus, but I do think they are going to put the interest rates down sooner rather than later. And the third thing is the Fibonacci retracement thing. I just feel like, last time they kind of depended on the whole COVID thing to actually make that work. And COVID's not coming back, so that's really not going to work. If it wasn't for that COVID dump that basically brought us to like 3,000 for like 5 hours, and it was it wasn't really like grass that had made it do that. It was the announcement that like the country was essentially shutting down, because right when that announcement was actually announced, the market like literally dropped in half for crypto, and then it just like came back up like 5 hours later. So it was a very, very short dip. Like unless you go to the day chart and zero in on that one day, it doesn't even show it. So it was directly because of that, and it didn't last very long. So that was just an abnormal blip, which I don't think is going to happen this time. I suppose someone could launch a nuclear bomb and make it happen. I'm just kind of betting that that's not going to happen, because I think that's kind of unlikely. I don't think any of the world dictators is crazy enough to completely want to die. So essentially, I doubt that's going to happen, and I don't think any of these conflicts, whether in Ukraine or the Middle East, is really going to precipitate into that kind of conflict. So I don't see another event like that. Yeah, there's this like cold thing coming out of China, but I really don't think that's going to be nearly as serious as COVID, and I don't think you're going to get everyone to lock down, even if it is like that last time. So the thing is, like, there's just not the macroeconomic factors to make that Fibonacci retracement work, and it's not always going to work that way. I can see like a 10-15% retrace after the ETF comes out for buy the rumor, sell the news, but I can kind of see like that's probably all you're going to get. Yes, I do believe we're going to get hard rejected at 50K, because there's going to be probably a big resistance at that nice round number, but it'll take us like maybe a month to get past that. And with the ETF coming, and I think there's going to be initial surge of buys once the ETFs get through, because remember, all these funds are actually competing with each other for customers. So they're going to be wanting to seed and buy Bitcoin for their ETFs. They're not operating in a vacuum like I'm the only one here, my expansion is the only one that matters. They know that there's a lot of demand, but they also know that that demand is going to be eaten up by other competitors. Like if BlackRock doesn't really promote their ETF and get people to buy it, it's not like people aren't going to go to Fidelity or ARK Invest or Grayscale or Franklin Templeton or one of the other ETFs to buy money. So they're all competing with each other. They want to get their ETF through first. Same thing with the Ethereum ETF. And on that, like Ethereum might actually pump in February or March, because I think we're getting an Ethereum ETF in May following the Bitcoin ETF. Once they approve the Bitcoin ETF, there's not going to be that much of a reason for them to deny the Ethereum ETF. So you got to think of it in that terms. They're all competitive with each other for customers. So they're all going to be kind of like promoting the crap out of it. And yes, people will be shorting the ETF, but at the same time, there's going to be a lot of buys, and it's going to be very, very dangerous to short. So the market is actually expanding. The pie is getting bigger, and I can see us going to new heights as new investors come in, not only through spot Bitcoin buying, but through the ETF as well. And like I said, the macro factors just aren't there for a giant retrace. It doesn't really make too much sense to me that we're going to have a giant retrace when these macro factors are all pointing positive and the economy's really not doing that bad because you, yes, you and a lot of other people are spending like crazy still, which says to me you're not really struggling at this point. So that's the news for today. Like and subscribe, hit that bell notifications button, and I will see you guys later.